Wall Street digested a wave of AI earnings today, and the reaction was anything but simple. AMD fell about 7% even after reporting record quarterly revenue of $11.5 billion, with data center revenue more than doubling year over year. Wall Street is worried about how much it's costing to build that growth, with capital spending nearly tripling. SpaceX had an even rougher day, dropping over 13%. In its first ever earnings report as a public company, revenue jumped 92% year over year and beat expectations, but a large net loss and capital expenditures surging sixfold spooked investors. Elon Musk pulled SpaceX's $1 trillion revenue target forward by a year and touted new compute deals with Anthropic and Google, but the market focused on the cash burn. Tomorrow brings the real test. SpaceX's first insider share lockup expires, freeing up roughly 7% of shares outstanding, worth over $100 billion for insiders to potentially sell. Elsewhere, the picture was brighter. Micron held steady near its trillion-dollar market cap after Elon Musk called memory the next AI winner, and Samsung, SK Hynix, and Micron all flagged tight AI memory supply at a major industry conference. Arista Networks hit a fresh all-time high after this week's earnings beat, and Vertiv jumped on an analyst upgrade, continuing its recovery. Coherent and Lumentum stayed elevated on the ongoing Chinese optics ban story. Tonight brings three more earnings reports after the close: SanDisk, Western Digital, and Albemarle. All three dipped today ahead of their prints, a sign expectations are sky-high after big, recent run-ups. What could today's stock activity mean for the build-out of data center suppliers? The market is starting to separate AI beneficiaries with pricing power, like Micron, Arista, and Vertiv, from AI spenders absorbing near-term cash flow pain to build capacity, like AMD and SpaceX. That's a sign of a maturing cycle, not a broken thesis. But tonight's memory earnings will be a useful test of whether good numbers still get rewarded.